Okay, buckle up, everyone, because a week ahead, April 28th to May 2nd, 2025, it's looking like more than just interesting. It feels like a real high-stakes roller coaster is setting up.
Absolutely. We're not just looking at spreadsheets here.
Right. We're diving into count them, five massive potential triggers that could really, send things flying.
Or exactly. Forget the usual noise.
We're trying to unpack what actually matters, what could lead to those aha moments. It's about the forces behind the numbers this week.
And the momentum, right. Building towards what could be a pretty wild May.
Definitely feels like it. This week seems packed with catalysts.
Oh, it is. You've got the big economic releases, a key central bank decision, and then the jobs report plus Apple earnings. It's quite the lineup.
Seriously, anyone watching the markets needs to pay attention this week.
For sure.
Okay, so let's start with Monday, April 28th. Our sources are saying surprisingly quiet. No major economic data.
Yeah, that's right. It looks like a bit of a breather, at least on paper.
So is this just the calm before the storm of data?
That's a good way to put it. Think of Monday as setting the stage, like the market taking a deep breath.
Right.
There's no big data point to react to immediately, so maybe we see some follow-through from last week, but mostly anticipation, building for what's coming Tuesday and beyond.
Okay, anticipation builds. Then Tuesday hits, April 29th, and bam, the data starts flowing.
It does, quite a bit, actually.
We've got advanced trade balance in goods, advanced retail and wholesale inventories, S&P Case-Shiller home prices, consumer confidence for April, and March job openings.
Wow. Yeah, it's a significant initial batch. Gives us those first clues.
What kind of clues are we looking for here? What's the early signal?
Well, you get a peek into a few key areas. Trade and inventories tell us a bit about supply and demand flows.
Right.
Case-Shiller gives us a read on housing.
Yeah.
You want to watch the rate of price changes there. Is it slowing down significantly? That could have broader ripples.
And consumer confidence, job openings. Hints about the consumer and the labor market.
Exactly. Early hints. Nothing definitive yet, but these pieces start to form the puzzle we'll be looking at all week. Hints of inflation pressures, maybe, or signs of a slowdown.
Got it. Little appetizers before the main course on Wednesday, April 30th? Because Wednesday looks absolutely jammed.
Oh, Wednesday is the data deluge? No question. It's packed.
Okay, lay it on us. What are the big ones?
All right, you've got the ADP employment report. That's the private payrolls number. Then the first estimate for Q1 GDP. Big one.
Okay, our first look at growth for the quarter.
Yep. Then March personal income and spending, the PCE, and crucially, the core PCE inflation number.
Core PCE. That's the Fed's preferred inflation measure.
That's the one. It strips out food and energy, gives a supposedly cleaner look at underlying price trends. This is hugely important for the Fed's thinking.
So if core PCE comes in hotter than expected,
then expect markets to react. It could ramp up worries about inflation sticking around, maybe push back expectations for any Fed rate cuts, could even strengthen the case for keeping rates high or, potentially more hikes, though that seems less likely now.
and if it's cooler.
Cooler might calm some nerves, suggest inflation is easing, maybe bring rate cut discussions back to the table sooner. It's a pivotal number.
Okay. And there's more on Wednesday, too.
Oh, yeah. Q1 Employment Cost Index, another inflation indicator the Fed watches, Chicago Business Barometer for regional manufacturing, and pending home sales. It's a full economic checkup in one day.
Wow. Okay. Deep breath after Wednesday. Then we hit Thursday, May 1st. What's on tap?
Thursday keeps the data coming. We get the usual initial weekly jobless claims, plus key manufacturing reads, the ISM manufacturing data, and the final S&P U.S. manufacturing PMI.
So a pulse check on the industrial sector.
Exactly. And March construction spending, April auto sales. But the big wrinkle on Thursday isn't just U.S. data.
Oh, what else?
The Bank of Japan. They have their monetary policy decision.
Ah, right. The BOJ. How big of a deal could that be? Adding an international flavor here.
It could be quite significant. Global markets are interconnected. A major policy shift, or even just a change in tone from the BOJ could send ripples everywhere.
Especially in currencies, I imagine. The yen.
Definitely the yen. Any hint of change in their stance could cause big swings against the dollar, the euro. And remember, the yen sometimes acts as a safe haven. If they signal something unexpected or if global risk sentiment shifts, you could see flows into or out of the yen impacting broader markets.
So even if the US ISM number looks decent, A surprise from Tokyo could throw things off.
It certainly could inject volatility. It adds this whole other layer beyond just the U.S. domestic picture. Investors will be watching both U.S. data and the BOJ very closely on Thursday.
Okay, that's a lot, and it all leads up to the grand finale, Friday, May 2nd. The big one.
The main event for many, yes,
The
the April non-farm payrolls report.
official jobs number. The culmination of the week's employment clues. This always moves markets.
Always. It's the most comprehensive look at the labor market health, job creation, unemployment rate, wage growth, huge implications for the economy and Fed policy.
But wait, there's more. As if NFP wasn't enough. Apple reports earnings on Friday, too.
Yes, talk about a potentially explosive combination, the jobs report and Apple earnings on the same day.
Wow. Apple? I mean, it's not just a tech stock, is it? Its reach is enormous.
Absolutely not. Given its size, its role in global supply chains, and its connection to consumer spending, Apple's results, and importantly, its outlook, can send signals across the entire market.
So good news from Apple could boost sentiment, even if the jobs report is just okay. Or bad news could really sour things.
Precisely. A strong Apple report might suggest consumer resilience, tech strength, could lift spirits. Weak results, maybe citing supply issues or slowing demand, could amplify any negative vibes from the jobs report, or even counteract a positive one. The timing makes Friday potentially very, very volatile.
So looking back at the week, Monday's quiet, Tuesday's clues, Wednesday's data flood with GDP and core PCE, Thursday's manufacturing and the BOJ wildcard, and Friday's NFP and Apple climax. It's intense.
It really is a critical juncture. You've got major reads on inflation, growth, the labor market, plus that global central bank angle and a mega cap earnings report. It's a potent mix.
And all of this feeds directly into what the Fed is thinking, right? Their next meeting isn't far off.
Exactly. May 6th and 7th. This week's data is basically the final crucial input they'll have before that meeting.
So expect markets to be hypersensitive, trying to guess the Fed's next move based on how this data lands.
You got it. Every release, especially core PCE and NFP, will be filtered through that lens. What does this mean for the Fed? Expect reactivity, potential chaos even, as investors position themselves heading into that Fed meeting.
It really sounds like this week could set the tone for May and possibly beyond. Thanks for walking us through these trigger points. It definitely helps clarify what to watch for.
My pleasure. Understanding these potential catalysts and their interplay is definitely key right now. The insights from this week could be really valuable going forward.
Absolutely. And that's our deep dive for today. So a final thought as you watch this week unfold. How might the narrative shift based on this flood of information? Will it confirm existing trends, or will we see a major pivot in market sentiment heading towards that Fed meeting? Something to ponder as the data rolls in.